Hey, this is Annie Dickerson with Goodegg Investments. Ready to talk real estate? Let's get cracking.
A lot of real estate investors ask, especially when they're starting out, why would I invest out of state when I can invest in my own backyard? Let's take a closer look. So investing in your own backyard does have the added perceived benefit of having a little more control. So you can get in your car and drive over to the unit, see what it looks like, maybe fix some things, get to know the tenants. But if you are investing in a more passive capacity, investing out of state might serve you better because you have a wider array of options of different markets that will help you meet your different goals. Each market is very different. Each market is in a different part of the real estate cycle. Some markets are expanding and growing and new jobs are coming in, and others are contracting. If you live in one of those places that's contracting, you may not want to invest where you live. Likewise, if you live in one of those places that's expanding, maybe the prices are already a little bit too high for what your price range is. When thinking about where to invest, it's important to think about your goals. Are your goals to invest for cash flow, to invest for appreciation, for short term, for long term? There's a whole bunch of different things to think about, and each individual market will offer you different things. And so that's why it may not always be best to invest in your backyard. Further, investing out of state and in different markets allows you to really diversify, not only across markets, but across asset classes. So that's why we always say, live where you want, invest where it makes sense. Well, that's it for now. Until next time, have a sunny side up day.